Hey everyone, welcome to our Q2 market update. It's just about a month past the end of June, which is the end of Q2. We got all the numbers, we did all the research, and you're probably wondering what's going on in the market. I feel like everybody is asking the same question. I've been in the industry for about 17 years. I've never seen a market like this. Why? We have historic low inventory levels, plus we have really high interest rates, the highest they've been in over 22 years. And nobody wants to sell because they're locked into a very low rate from when they refinanced during the pandemic. So very few sellers. Buyers are kind of on the sidelines waiting for rates to go down, and prices really haven't dropped. And I think that is what makes this market so different than any other that we've seen in the past. So we're going to talk about inventory levels. We're going to talk about, which is going to be supply. Talk about demand, days on market, how long houses are staying on the market, as well as closed sales. And at the end of the video, we'll be talking about what's going on in the ultra luxury market over $20 million here in LA. If you haven't done so already, hit the subscribe button if you want to see more videos like this. If you like the video, would appreciate a like and leave a comment down below if you have any questions. All right, let's get started. So I always like to start off with what's going on with supply. What are the inventory levels that we're seeing here in Los Angeles? We're going to show you a map of kind of the area that we're talking about, all the way from Los Feliz, Studio City, all the way down to Malibu, as far south as LAX, and kind of everything in between. That's kind of the market that we sell. We don't sell in Calabasas or that area over there. If you're looking at my screen right now, you can see where the inventory levels were at the end of Q1. There was 2,297 houses on the market. This is just single family houses. Right now, we're at 2,544. So inventory level has gone up, but not by much, okay? At the end of Q1 was also at the end of, or at the beginning, I should say, of ULA, which is the new transfer tax that is being imposed for houses over $5 million. So there was a lot of sales that happened right at the end of Q1. And what we're seeing now is that there's a little bit more inventory, but there's not that big of a change, okay? Let's look at months supply of inventory. Right now at the end of Q2, we're seeing about 5 months. A neutral market is in between 4 to 6 months. Anything under 4 months of inventory is predominantly a seller's market. Anything above 6 or 7 months of inventory is considered a buyer's market. Right now, we're kind of neutral, and we'll talk about that more in a bit. Month supply of inventory year over year was about 3. So now that we've compared Q2 to Q2 last year, let's compare Q2 now to Q2 pre-pandemic, which is before March of 2020. So that's going to take us down to 2019. The inventory back in 2019 for the end of Q2 was 4 months. So that really hasn't changed that much. Right now there's 5 months, so it's a very slight change of inventory, a little bit more inventory in LA. So what are we really seeing out there? We're seeing that there's very few sellers. Most of the sellers are going to be, trust sales, so people that have passed away, some divorces, right? The people that are looking to downsize as well, we're seeing a lot more of those sellers. People that have been living in their house for 20, 30 years, and they're looking to move into a condo or just a smaller home now that their kids have gone. But the biggest thing is that nobody wants to let go of their really low interest rate from anywhere between 2.25% to 3% when they refied during the pandemic, and now they have to reset their interest rate to 6.5 to 7.5, right? Kind of depending on the size of the mortgage and their qualifications. So that is the biggest struggle right now in this market, is trying to find homeowners that are looking to sell, right? Because they're really on the fence about should I sell or not. Now that we've covered supply levels in the greater Los Angeles area, let's talk about demand. Where do we see demand? Demand is basically what is under contract right now. It's a good indication of what's going to be closing in the next 30 to 60 days. Obviously, some of these properties that are under contract will come off the market for whatever reason, or they won't sell, or they'll come back on the market. But most of them will probably sell. Okay, so if you look at my board right now, you can see where pending sales were at the end of Q1 this year. Right now, we're at 555 properties under contract at the end of Q2, a little bit more than there were at the end of Q1, which is a good sign. Let's look at where pending sales were at the end of last year, Q2, which was right when people kind of stopped buying houses. Obviously, there's still transactions being done. I'm just saying where the surge was at the beginning of last year, it really took a dip, and the peak was really June of last year, May, June of last year, and then it really took a dip, and the amount of sales really dropped dramatically back then. Now let's look at pending sales year over year. Let's compare at the end of Q2 to the end of Q2 last year. Right now, the amount of pending sales is 757 units at pre-pandemic levels. So this is going to go back to 2019. They were at 933. So this is a 27% change here. And then there's a 68% change in demand from pre-pandemic levels. So this is really eye-opening, guys. If you're looking at where we're going to be in the next 60 to 90 days, this is obviously not a good sign. We're doing 27%. There's 27% less demand at the end of Q2 than there was year over year last year, and there's a 68% change in demand compared to pre-pandemic levels before 2020. So again, this all goes back to interest rates. They're really high. Also, housing prices haven't really dropped. So buyers are just kind of waiting and lingering and just kind of waiting for the prices to drop. But we're not really seeing that. Why? Because the houses that are selling are houses that are really nice. They're fixed up. They're turnkey, ready to be moved into. And those are the houses that buyers are looking at. And those houses are getting multiple offers. The houses that are sitting on the market are the houses that need a little bit of work, are overpriced, and they're just kind of sitting on the market, and buyers are submitting offers on those houses. A lot of those sellers aren't being realistic with where they're at in price. So we'll see how those sellers react in the next 3 to 6 months, if they're going to start lowering prices and start seeing more sales. But for now, there's a huge decrease in demand in properties under contract year over year, as well as looking at before the pandemic started. Now that we've talked about supply and demand, let's talk about days on market. How long are properties staying on the market? This really isn't the best indication of where things are at, and this is what makes this market so interesting. So let's look at the data here. If you're looking down at my iPad, you can see that at the end of Q1, houses that were selling were taking about 37 days. That has now dropped to 27 days. So that's the amount of days that it takes to sell a house, or the houses that are selling are taking 27 days. If you're looking at Q2 year over year, last year, it was around 21 days. And then if you're looking at pre-pandemic levels, so at the end of Q2 in 2019, they were at 49 days on the market. Okay, so why are houses selling faster now than when there was more demand before the pandemic, as well as last year? That's a great question. Again, like I said earlier in the video, the houses that are selling are turnkey, they're priced well, they're move-in ready, they have something special, and those are getting multiple offers, and those are selling really quickly. The houses that don't have that are priced too high, are just sitting and lingering on the market. So even though there's the houses that are selling really fast, really not a good indication of where the market is, right? The better indication of where the market is looking at supply and demand and comparing that to what happened last year as well as pre-pandemic levels. All right, so let's go now to closed sales. This is one of my favorite indications of where the market is at, closed sales. We talked about supply, we talked about demand, we talked about days on market, but how many houses are selling, and how does that compare to last year or this or the first quarter of this year, and how does it compare to Q2 in 2019? All right, so if you're looking down at my iPad, you can see at the end of Q1 there was 1,113 closed sales. Now that has increased to 1,438 closed sales, so that's an increase of 29%. If we're looking year over year, last year at the end of Q2, there was 2,184 closed sales. So that's a 51% decrease year over year. That's huge. 51% less closed sales in this greater Los Angeles area compared to Q2 last year. And if we're looking at pre-pandemic levels, there was 1,723 houses sold. So that's a 19% decrease. Okay. So again, I don't want to be giving out bad news, but right now we're just not seeing a lot of sales volume for obvious reasons of very, very little inventory and high interest rates. It is the perfect storm right now. Okay, now that we've talked about supply, demand, days on market, and closed sales, this is one of my favorite stats to look at. What is the over $20 million ultra luxe market doing? So right now there's 151 properties that are currently on the market from Los Feliz and most of the valley all the way to Malibu as far south as LAX. Compared to Q2, there's 142. There's a slight increase. Months of inventory has changed dramatically though. Right now, there is 76 months of inventory over $20 million in this greater Los Angeles area. That is a huge number, especially when you compare it to the end of Q2, at the end of Q1 this year, which we'll talk about in a second. And then closed sales, there's only been 10 closed sales over $20 million in that greater Los Angeles area in all of Q2, which is April, May, and June. All right, so let's look at the data. Let's dive into it a little bit more. Why has the amount of months of inventory increased so much? Well, there's only really one reason, and that's ULA. Check out this graph of month supply for over $20 million in this greater Los Angeles area. This is going to be all of this year to date, but you can see how this shot up month supply, and it's still pretty high compared to earlier Q1, right? Why is that? Because everybody that was trying to sell over $20 million was lowering their price, and they wanted to beat that ULA transfer tax that was going to be imposed starting April 1st. So here's a direct correlation right here on this graph to see where things started to shift. ULA started on April 1st. This is month supply. Let's look at closed sales. Here on this graph, you can see that there was a really, really crazy amount of closed sales for properties over $20 million. And after that, there has been very, very little activity over $20 million. Obviously, there is a massive tax for houses over $5 million, and then that tax goes up for houses over $10 million. So this is not good for homeowners looking to sell their house over $20 million. If you're a buyer, then you have your pick. You have a lot of inventory. You have more negotiating power for houses over $20 million. Actually, over houses over $5 million. This is just a stat over $20 million, but this stat probably isn't too much different over $5 million. The houses that are selling more are the houses under $5 million. Now that we've talked about supply, demand, days on market, closed units, and then where the ultra luxury market is, let's dive into the interest rates. So here, this is a graph that you can find online, but this is the last 23 years of where the interest rates are. So the highest that they've been since early 2000 is 8.62%. That's really, really high. Obviously, that's gone down, and it went down to historic lows, down to mid twos around here, and then again they shot up back to the 7% range, and you can see this really, really sharp incline right here, which we haven't seen in a long time. It's a huge incline from, if you look at here, this all started last year in about January, and you can see how it's gone up, and then it shoots up in March. You can see this really, really steep line in March, and they were still pretty low. I mean, they're still in the fives, in the fours, but then they just continue to rise you can see in September as well, this went up really, really high. So you can see that there's a sharp incline in May, as well as September. And obviously this is really affecting our market. Thanks for watching our Q2 market update, where we went over supply, demand, days on market, closed sales, where the market's at over $20 million, interest rates, and next time we'll do a month over month analysis. This is the end of Q2, so we did that analysis. If you want a more detailed analysis of where your market is at in your neighborhood, let us know. We'll be happy to show you a market analysis just like this, just for your neighborhood. This is, again, a very general market analysis in the market that we serve. Leave a comment down below if you have any questions. Hit the like button if you like this video. Subscribe if you want more videos like this, and I'll see you next time. See you later. Bye.